Okay, Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. And a very good day to you. Rabbi shrah li sadri wa yassir li amri wa halul 'uqdatam min lisani yafqahu qawli. Apa khabar semua? Harap semua dalam keadaan sihat sejahtera. Alhamdulillah kita dah berapa hari, kita dah hampir seminggu berpuasa. Harap semua masih dalam keadaan yang baik, dalam momentum yang baik, dalam keadaan yang giat untuk melakukan amal ibadah. Okay, dan berlumba-lumba untuk melakukan kebaikan insyaAllah. Okay, so as for today, we will still go through the next chapter in chapter 2. Okay, you still remember previously I have mentioned to you we have the requisite of Islamic capital market, which consists of Shariah governance, legal and regulatory framework. And for this week, we will go through on the risk management framework in Islamic capital market. So this is very important because without risk management in Islamic capital market, we cannot do anything on the product or the transaction. Everything will be collapsed or everything will be unprofitable. Okay, kerugian. Okay, but with the good risk management taken from the institution as well as the any product that been developed by the institution, okay, all the risk can be controlled, can be mitigated, can be diminish all the risk, okay, in order to give a higher profit toward the investor. Okay, so when we talk on the risk management, actually it relate to ourselves. Okay, semuanya berkait dengan diri kita sendiri sebenarnya. Semua benda di sekeliling kita adalah kita boleh kaitkan dengan risk management, kan? Contohnya lah, kita kata kita tengok berita kebakaran, kan? Kat situ kita boleh relate how risk management, kan? Macam mana untuk kita mengelakkan kebakaran. Kita tak bermain dengan api, contohnya. So that one is a risk management dalam kehidupan kita. Untuk mengelakkan kita kemalangan, kita akan memandu secara berhati-hati. Itu one of the risk management in our life. Itu basically we involve in risk management. Untuk mengelakkan duit kita dicuri, kita simpan di dalam peti besi, kita simpan di dalam poket kita tak tunjuk merata-rata. So that one is a risk management as well. So same goes to the system, Islamic capital market, Islamic banking, we have their own system of risk management. And then dia punya risk management is more kita kata intensive to cover all the products, okay, for the sake of the investor, for the sake of the people who involved in the transaction. Okay, so that one is for introduction. Okay, we move to the next one. This is the concept of return and risk. After this, we will go through the risk management, risk profile in the ICM, Shariah non-compliant risk. So overall, we will see how the risk being produced or how we will identify the risk and what the risk is involved in capital market. So what is risk? According to the Vaughan also, risk a condition which there is a possibility of an adverse deviation from a desired outcome that is expected or hoped for, which means something that not happen for what we expect to be happen. Kita mengharapkan tak ada kecelakaan berlaku di perjalanan kita, tetapi tiba-tiba ada risiko kemalangan kecil berlaku, contohnya. So something that deviate, okay, melangkaui daripada apa yang kita jangkakan. Kita jangkakan akan dapat keuntungan, tetapi kita dapat kerugian. So kerugian-kerugian itu adalah risiko-risiko. So something that deviate from what we expect. Okay, sesuatu yang lari daripada apa yang kita jangkakan. Interestingly, Chernobyl 2007 raised a very important and valid point regarding stating that it's not necessarily perceived as a negative concept. So when talk on risk is not only a negative thing. Okay, for example, perspective of investment, risk could be volatile of expected future cash flow measured by the standard deviation. And also because of this uncertainty, because fluctuation underlying value may occur in the either positive or negative direction, risk defined in this way does not exclude the possibility of positive outcome. Hence, risk is not necessarily associated with the negative concept. Okay, then we move to the risk and return. So this is the fundamental relationship between risk and also return. Okay, the greater the risk, the greater the expected return. So they are positively related to each other. Okay, so kita tahu semakin tinggi risiko, semakin banyak kita punya pulangan yang kita akan dapat. Okay, investor assume to be risk averse. So what is a risk averse? Okay, they will want the same return with less risk. Assume greater risk for only greater return. Okay, so we can say that risk averse is actually that the investor will prefer lower return with known risk rather than higher return with unknown risk. Okay, maksudnya investor ni prefer untuk pulangan yang lebih kecil, okay, dengan risiko yang diketahui compare daripada higher return, okay, return yang lebih tinggi dengan risiko-risiko yang tidak diketahui. Okay, risk and return relationship varies over the time. So what is risk? It is an uncertainty, the possibility that the actual return may differ from the expected return. Okay, as what the first slide mentioned tadi. Probability, the chance of something occurring. Okay, the risk might happen in the future, and expected return is the sum of possible return times the probability of each return. Okay, risk from a finance viewpoint refer to the uncertainty associated with the return from the investment. So kita ada banyak pengertian-pengertian risiko, tapi di dalam konteks finance, capital market, banking and others finance, so risk here referring to uncertainties with the return from the investment. Okay, uncertainties could translate into volatility or fluctuation of return from investment. So when the stock market is fluctuate due to some reason, that would be a riskier for the investor. And the risk actually can be measured. Okay, it can be measured by the standard deviation. So rasanya ni pun awak belajar juga dalam kelas statistik. Okay, the risk can be measured by the standard deviation (ST). And gain and losses, upside potential, and we have a downside possibility. The concept of return, okay, we can define as a reward from investing, received as a current income and increased value. Okay, level profit from an investment. So the total return we can divide into the current income that you will receive maybe in the periodic cash flow, or maybe you will receive quarterly, monthly. Okay, the yield measure related to income return to a price from the security. Okay, it must be in the form of cash. Okay, readily convertible into cash, dividend from stock, mutual fund, or sukuk, something that you receive. For example, ASB, tabung haji is not investment. Okay, for example, ASB or any investment yang you join, you will receive a dividend. Okay, you receive dividend twice a year. Okay, so semi-annually. So you will receive at the month of 6 and the month of 12, you receive your dividend. So your dividend is in the term of cash or something that can be converted into the cash. Okay. However, we also have return in term of capital gain. Okay, appreciation of the value, the change in the price or asset, or change of market value investment. For example, in stock that you hold a stock for one season, for example, 1 year. So the stock during the COVID, in the phase of COVID last year, you hold until now, the stock will boom, right? So harga dia masa dulu mungkin jatuh, so that the best time to buy. So you buy the stock at that time, for example 1 year ago. So for this year, the stock price is higher than before, kan? Jadi stock tu dah mula meningkat, naik. Jadi itu menunjukkan you have a capital gain. Because why you don't sell it yet, ataupun nilai stok tu berubah. Contohnya dulu you beli dengan harga 10 sen seunit, for example, ataupun RM1 untuk satu unit. Tapi dengan hari ini, unit tu telah berubah daripada 10 sen menjadi 50 sen seunit, ataupun menjadi RM3 seunit. Okay, itu kalau seunit. Let's say you buy 1,000 unit. Let's say you buy 10,000 unit of the stock. So what is the capital gain that you receive? Okay, boleh So still risk aversion, characteristic of individual preference in risk-taking situation. For example, by experience, experiment, rational behavior assumed to be risk averse. Okay, usually people will be risk averse. A measure of willingness to pay to reducing risk, a prefer lower risk given same expected value. So different person will give a different risk aversion or different risk exposure to one person. For example, one person, we name it as a Ali lah. So Ali is a government servant with a monthly income, fixed monthly income, for example, 6,000. So Ali will have a appropriate risk aversion for himself ataupun dia boleh ambil risk certain harga sahaja. However, we have Ali, we have a friend Aminah. So Aminah is a business woman. So as a business woman, her income would be fluctuate. Sometimes she receive a very high amount of profit, for example, 100,000 for a month. However, in the next 3 months, when the during pandemic come, okay, the profit will be fluctuate. So when it fluctuate, it will give a different risk exposure or different risk aversion for Aminah as well. So berbezalah, setiap orang adalah berbeza based on their commitment, based on their environment, based on dia punya tanggungan dan sebagainya. Okay, so what is a risk management? It's the process or the techniques of reducing the risk faced in an investment. Okay, it's a process lah. It's a process yang memang ada, telah dinyatakan, it's a process. Okay, it generally involves 4 broad steps. For example, the first one is identify. We have to identify what is the risk. We have to measure it. Okay, sebesar mana risk tersebut ataupun sekecil je risk dia, which is acceptable for you to accept the risk to be happen. And then if it is a small risk, you boleh ke untuk menghadapi risiko tu berulang-ulang kali, ataupun how you control the risk, ataupun sesuatu risk tu terlalu besar, how you mitigate it, how you avoid the risk. Good. Okay, and the last one, in the process itself, we have to be the risk have to be reported, and the risk must be monitored. Okay. Okay, what make risk management challenging is the fact that the risk and return are generally positively correlated. The risk return trade-off. The challenge of risk management is to protect the expected return while simultaneously reducing or laying off the risk. Okay, tengok ya. So this is the graph of risk return trade-off in investment. Okay, a principle that potential return rise with an increase in risk. Okay, the first one say that a principle that potential return rise with an increase in risk. So the higher the risk, the higher the expected return will go. Okay, low level of uncertainty or risk associated with low potential return, whereas the high level of uncertainty or risk are associated with high potential return. Okay, as you can see here, we have a money market fund, bonds, because why? Bonds will give we can say a fixed amount, kan? Fixed amount of return. Okay, ataupun kita kata the capital will be given back to the investor. And then we have balance or target date fund. So it's situated in the medium. Okay, it's a balance fund, including stock maybe, perhaps anything that which is more stable, and then stock fund. So stock will be here. Okay, the higher risk for stock because it's stock market fluctuate a lot, and then small cap stock. Okay, option commodities. So ini pun dah masuk dalam bahagian derivative. So this will give a higher spread of risk and the higher spread of return. Okay, semakin tinggi di sini, semakin when we do trading on the commodities, okay, it will give more higher risk and we expect more return on it. Okay, we move to the next one, which is risk exposure. Okay, risk exposure. We now moving to the risk management system. The first one is risk exposure, a particular type of risk one faces due to the one circumstances. Okay, ataupun apa yang akan diperolehi oleh seseorang, risiko apa yang seseorang itu akan hadapi. For example, in the type of job, business, pattern of consumption. Okay, for example, the risk of crop failure and the risk of a decline in the price of a farmer. Okay, for example, crop failure, harga nenas sekarang tengok macam makin menaik kan. For example, harga getah menurun. Jadi itu akan menyebabkan risiko untuk semua pengusaha-pengusaha getah. Okay, top glove ke. Okay. Kemudian the risk of fire, theft, storm, damage, earthquake, damage for a house owner. Ni semua as a natural disaster punya risiko. And the currency risk for a person who business involve import or export of goods. Jadi kat sini kita ada perbezaan currency, mata wang yang turun naik. Kadang-kadang mata wang kita RM4, kadang-kadang mata wang kita naik lagi RM4.50. Jadi kat situ fluctuate, the currency is fluctuate, jadi itu menyebabkan adanya risiko kepada import process trading ataupun proses business import and export. So in financial market or in capital market, we have all of this risk exposure. Okay, for example, the first one, we have a financial risk, we have operational risk, business risk, and other risk. So in financial risk, basically in finance, we involve in financial risk. For example, credit risk is a risk where the institution or the bank or any other financial institution cannot repay back, or it involve ourselves when we cannot repay back to the institution ataupun kita unable to make a payment to the bank. Itu menyebabkan credit risk. Okay, liquidity, currency, interest rate, equity price, and also market risk. And then we also have operational. Okay, when we talk on operational, it about the process. Okay, the process that make it the problem will happen. For example, non-compliant, Shariah non-compliant risk. Okay, it involves operational. People risk, we have the issues with the people who conduct the transaction. For example, fiduciary risk. Okay, we have the SOP, we have the procedure to do transaction. However, the staff won't be able to comply with the procedure. So we have the issue in the governance. So that is a fiduciary risk. Okay, technology, legal, risk of inadequate or failed internal process. And then business risk, policy risk, financial infrastructure, systemic or country risk. Other risks we can say political, or it will be covered by the market risk as well. Okay, model risk and other exogenous risks. Okay, before that we have to classify the risk exposure. When we want to identify it, we have to classify the risk exposure. Okay, for example, the first one, nature of the loss. Okay, we identify either the loss that might be happen is internal punya risk or external risk. Okay, what happened in internal? Most of the loss caused by the human. Okay, process of technology, such as due to the human error, internal fraud, unauthorized trading. Okay, business delay due to the computer failure, telecommunication problem. Jadi kat sini ini antara contoh dia, internal, problem-problem dalaman yang berlaku. Okay, sebabkan apa? Disebabkan hang, dia punya sistem hang contohnya. Jadi transaction cannot be happen. Okay, ataupun internal fraud. Kita ada kes-kes yang kita dengar dekat bank, kita ada dia punya staff sendiri yang mencuri duit. Okay, pecah amanah kan. Ada satu kes dulu yang 1 sen yang dikutip kan, teller bank orang duduk kat bank tu ambil 1 sen setiap daripada transaction. Wallah alam betul ke tak. So that one is a internal problem or internal loss that might happen. And then we also have external. Sekejap ya. So internal ni it can be prevented, okay, by appropriate internal management practice. For example, tighten the control. Management of the personnel can help prevent some employee error and internal fraud. For example, in the problem or in the risk of internal fraud or in the risk of lack of skill from the staff itself, menyebabkan apa, transaction tu jadi tidak betul kan. Contohnya kita salah key in, human error, salah key in. Let's say kita nak key in 500,000 tapi instead of 500,000 kita key in dalam kita punya komputer dalam sistem 50,000 sahaja. Berapa amount kita short tu, banyak kan? Banyak, sebanyak berapa, 450,000 lagi short kan. Kat situ contohnya short. Jadi it's a human error. Jadi macam mana untuk kita tingkatkan, untuk kita mengelakkan human error yang berlaku ni, okay, kita boleh lantik let's say yang dulu tu adalah executive, so we have a senior executive and then we have a manager to authorize the process to be happen at the correct manner lah kan. Jadi kat situ kita ada proses untuk verify benda tu. Maksudnya seorang buat, kita ada senior, kita ada manager yang akan verify benda tu. Ataupun kita ada sistem tu sendiri yang akan detect, okay, apa yang tak kena dengan apa yang kita key in. Okay. Other than that, the company can give a training, okay, untuk latih pekerja-pekerja tu tadi. Okay, external, siapa boleh bagi contoh external? External can be in any form of natural disaster lah, di luar kawalan kita. For example, kita ada proses hijack, hacking, sistem kita kena hack, ataupun kita kena kecurian yang besar-besaran, teroris, kemudian natural disaster. Okay, semua tu adalah disebabkan external. And the second one, we have the impact of the loss. We can identify by identify the impact of the loss. Is it a direct impact or indirect impact? Okay, direct impact, kita tahulah kerugian yang besar, kita nampak. Indirect impact, something that we might know that we will be losses, ataupun kita kehilangan opportunity cost tu tadi, opportunity gain yang kita akan dapat. Contohnya, kita mungkin boleh save dalam 50,000, however due to the risk that happen, we lost the 50,000 to do investment in somewhere else. Contohnya ya. Okay, kemudian degree of expectancy, something that we can expect it to be happen or something that we cannot expect to be happen. Contohnya apa? Natural disaster, we cannot expect that to be happen. But however, the human error tu kita boleh detect. Contohnya kita tengoklah contohnya kita buka kedai runcit, contoh. Kita buka kedai runcit, kita boleh tahu tak dalam 1 bulan kan, ada seorang budak tu mesti akan datang. Budak tu akan datang, dia akan ambil pensil sebatang kan. So katalah 1 bulan dia datang sebanyak 3 kali. So kita tahulah kecurian kecil tu akan berlaku. Contohnya macam tu. So dia expect lah, benda tu is expected to be happen. And then other one is risk type, event type, loss type, the magnitude, either is severity or frequency of loss. Okay, after this you will see. We have risk identification process, that one will covering on type, event and loss. Okay, boleh lagi ke? Okay, kalau boleh bagi tanda thumbs up dekat group Telegram. Okay, so this is the risk identification process, which we have a hazard here, event and also consequence. So hazard is something that encourage the risk to be happen. Contohnya kita dalam insurance kita ada peril contohnya kemalangan. Tapi hazard ni contohnya disebab yang penggalak benda tu berlaku. Contohnya jalan yang licin ataupun tayar dia dah botak. So that will call hazard. So this hazard will lead to the event and also consequence. Okay, for example, a cause or hazard should result in one or more event. So salah satu daripada hazard ni akan menyebabkan beberapa event berlaku. And an event should have at least one cause, it must result in one more consequence. Okay, jadi event tu akan menyebabkan ada consequence yang berlaku. And a consequence or loss must result from one or more event and many result in new cause. Jadi semuanya akan hazard, event, consequence akan disebabkan oleh perkara-perkara yang di belakang dia ni. Okay, for example, for hazard, we have inadequate employee management. Okay, apa akan jadi kalau tak cukup staff? Huru-hara kan company. obsolete computer system. Apa tu obsolete? Oh, saya pun tak tahu. Dia mungkin computer system dia jadi apa, rosak ke, sistem yang tidak functioning well lah. Inexperienced personnel, okay, kita ada inexperienced punya staff, okay, they cannot handle a situation or transaction well. A large transaction volume, suddenly we have a larger transaction, banyak orang nak beli stok ke, okay. Diversify and cultural differences, unfavorable climate condition or geographical condition. So what happened in this hazard will actually give one event or two event as well. For example lah, kita ambil inadequate employee management, okay, tak cukup staff dan juga large transaction volume. So A and D, okay, will lead to the what? Will lead to the, we look on the event. Okay, the event we have internal fraud, unauthorized trading, external fraud, diversify discrimination event, improper business market practice, fail in accurate reporting system, system failure, and also natural disaster. So if we take inadequate employee management and also large transaction volume tadi, A and D, it will lead to the event of fail lah. Kita boleh kata E lah, fail and inaccurate reporting, or you can say a system failure, and also D, improper business and market practice. Juga boleh terjadi lah. Maksudnya kita dah tak cukup staff, volume pula banyak, transaction pula banyak nak kena buat. So akan menyebabkan sistem boleh fail lah, boleh fail the system. Okay, improper business practice, ada kesalahan dalam apa-apa saja yang kita buat tu. Okay, reporting pun mungkin terjejas. Okay, effect of the event, it can be write down, loss of recourse, restitution, legal liability, okay, regulatory and compliance, fines, penalty, taxation, loss or damage to the physical asset, and others as well. Okay. So we have to measure, okay, okay, severity. How to measure? We will look on the severity and also frequency. Severity and also frequency. Okay, kalau kita nak tengok tahap sesuatu risiko tu, kita akan lihat kepada severity and also frequency. So severity adalah tahap keterukan, okay, sesuatu risiko tu berlaku. Frekuensi adalah tahap satu kekerapan risiko tu berlaku. Jadi if you can see here, we have a diagram or we have satu chart, okay, regarding loss severity and also loss frequency. Okay, we have in that, we have low frequency and high severity here. Okay, we have a high severity and low frequency. Maksudnya dia jarang-jarang berlaku, tetapi impaknya sekali berlaku tu adalah besar. And then we also high frequency and also high severity. Selalu berlaku dan juga kerosakannya adalah kerosakan teruk. Kemudian we have in the lower, we have low frequency and low severity. Okay, dua-dua jarang ada lah. And this one we have high frequency and low severity. Okay, kerap berlaku tetapi impactnya adalah impact yang ringan. So kat sini akan menentukan apa proses yang kita akan buat selepas ini untuk risk manage, untuk mitigate all the risk. Okay, jadi kita perlu identify dulu apa risk that happen ataupun tahap kebesaran apa yang selalu terjadi di dalam sesuatu institusi itulah. Okay, untuk mengelakkan risiko-risiko itu berlaku. Dan kita harus kenal dulu tahap mana risiko itu, sama ada dia high frequency ataupun dia high severity. Okay, dan untuk each of the process, each of the size of the risk itu mempunyai risk management yang tersendiri. Okay, contohnya lah kita ada low frequency, high severity and also high frequency, low severity. So both of this is considered not available. Tak adalah yang high frequency and high severity ni. Ni Contohnya apa? Contohnya natural disaster yang terjadi terlalu kerap, tak ada. Yang tak ada juga low frequency, low severity. Okay, yang exist now is only low frequency, high severity, which mean natural disaster, for example. And this one, high frequency, low severity. This is the institution can be accept because why? Maybe the frequency is keep happening and they have a system to monitor or to mitigate it from be happen. Okay, low severity yang mana dia boleh accept benda tu dan dia punya severity tu taklah teruk sangat kan. So dia kerap berlaku tapi tak teruk. Okay. So how do we manage all of that? Okay, based on the severity and also frequency, we have risk avoidance. Okay, for example, risk avoidance. What is risk avoidance? Something that we avoid. Kan, kita ada risiko naik kita naik kapal terbang, kapal terbang akan jatuh. Jadi kita tak nak risiko tu terjadi, kita avoid terus naik kapal terbang. Kita tak nak risiko kapal terbang jatuh, kita avoid terus. So that is risk avoidance. We totally avoid it. Okay. Financial institution will avoid certain risks by simple business practice and will not take up activities that impose risk upon them. Jadi maksudnya kita tak nak langsung risiko itu terjadi. Okay, jadi dia akan avoid, tak akan ambil langkah tu untuk menjadi salah satu transaksi, salah satu produk dia contohnya. Okay, and then we also have risk transfer. Some risk can be reduced or eliminated by transferring or selling this well-defined market. Risk transferring technique include use of derivative, hedging, selling or buying financial claim, changing borrowing term. For example, dalam risk transfer, we insure ataupun kita akan jadikan sesuatu kita ada takaful, kita ada insurance, itu adalah contoh risk transfer. Ataupun secara umumnya kita ada warranty process. So that is called a risk transfer. And also we have in the finance context risk transferring including derivative for hedging. So kita boleh lock the price and also we can do trading between two parties. For example, a farmer and also the pengilang yang akan bertransaksi between two parties. So pengilang mungkin nak lock harga, tak nak harga terlalu tinggi, ataupun farmer mungkin akan lock harga, tak nak harga terlalu rendah. Jadi akan berlaku proses hedging where we can transfer the risk. And also we have a risk retention and also risk reduction. Okay, this one is for the high frequency. Okay, some risks cannot be either eliminated or transferred, must be absorbed by the banks. These risks are accepted by the financial, which means the risk we cannot avoid it to be happen. Okay, nak tak nak memang risiko tu akan terjadi. Contohnya human error lah yang I have mentioned earlier. Okay, human error, risiko-risiko tu akan terjadi. Jadi nak buat macam mana? They must produce a system that they can adapt. And usually the cost of error tu is much more smaller lah. Cost of error tu mungkin tidak menyebabkan kerugian yang sangat besar. Jadi dia mesti ada sesuatu sistem yang akan dibuat untuk mengelakkan perkara itu terjadi ataupun terlalu kerap terjadi. Okay? Contoh yang umum, kalau saya boleh bagi contoh, kita akan pasang untuk mengelakkan kecurian, kita pasang CCTV. Untuk mengelakkan terjadi rompakan ke apa ke, kita ada CCTV yang boleh mengawal. So this is a risk management strategies at different phase of transaction and risk event. For example, ex ante, sebelumlah, ongoing is a process, ongoing process, expose is after or after the ongoing process. Okay, for risk avoidance, decide which risk to avoid. Jadi sebelum tu kita akan decide dululah yang mana kita akan elakkan untuk kita ambil. So it's not applicable lah bila kita dah elakkan benda tu daripada terjadi, it's not going to be happen. So ongoing is not applicable, so same goes to after the process exposed. And the second one, we have a risk transfer, which is a hedging and also insurance. The ongoing, we will monitor the process, and in case the risk also might happen, so exposed we have a claim for insurance. Okay, we expect the case will be happen or the problem will be happen. So exposed that what the action we taken is claim. Okay, And also risk retention and also risk reduction, which include risk prevention and risk mitigation. Okay, how to prevent from the risk will be happen, and how to mitigate from the risk to be happen. Okay, so in this case, we have the system to prevent and to mitigate. For example, I have mentioned we have 3 layers of checking and verify a form of transaction to transfer a 50,000 ringgit Malaysia, for example. So we have 3 stages of staff that will cover the process transaction to be happen. We have 3 stages, okay, in our side and also the other side. Okay, contohnya kita nak transfer ke pihak sana pun akan check juga. So by that we can mitigate any error. For example, yang tadi daripada 50,000 sebenarnya kita nak transfer 500,000. Okay, mitigate all the human error. And how the process will be happen by the monitoring by the staff. Okay, we have the senior staff, we have the manager, okay, and manage it and expose it. After that is to cope the risk lah. Okay. Other than that, in risk management system, we have the whole operational that will support the risk management. For example, we have the board of director to define the overall objective, ensure the implementation by the management. So the board will see in the top of the hill lah. Okay, akan tengok okay dekat atas sekali adakah semua berjalan dengan baik. And who will conduct the process? The process will be handled by the higher management to set up an institution-wide risk management system to identify the risk, implement the objective policy of the board. Okay, and then we have the staff who will undergo the process, which is to identify and measure the risk, to set the limit, rules, guideline, procedure related to the risk, to publish various risk report periodically for both current situation and expected future scenario. And we have the all operational unit or the employee to identify and control. So when the risk management unit and also the management have set up the rules, standard policy, okay, the all employee and all the operational unit must comply to the risk management process itself. Kan, contohnya kita perlu bagi dulu kepada senior, so kita kena comply lah, kita perlu bagi dulu kepada senior untuk semak. And we have the internal audit, monitor risk management process. Okay, at the end of the year, perhaps we have internal audit to check, okay, check and balance what is the consequence or what is the lacking from the system itself. Okay, to ensure that the risk-related guidelines, policy are followed and implemented at different level of operation. So this is the overall concept of risk management process I have mentioned to you earlier. We have a risk profile in ICM. So this one is a generic risk and we have a unique risk. Unique risk is quite unique and deeper and specific, more specific risk. Okay. As for credit risk, potential that counterparty failed to meet obligation in accordance with agreed term condition of a credit-related contract. Okay, it can be anyone, it can be us, or it can be a financial institution as well. Maksudnya dia tidak boleh membuat pembayaran semula. Okay, market risk, the potential impact of adverse price movement such as benchmark rate, foreign exchange rate, equity price on the economic value of an asset. Okay, ataupun kita boleh katakan contohnya ialah due to the market uncertainty, for example, the change of the US president, okay, the change of the political factor that might affect our stock market as well. Okay, contohnya political leader, okay, they want to do a press conference for one political leader only. Okay, bila dia buat saja, dia cakap je nak buat satu press conference menyebabkan harga market can go down. Itu antara market risk lah. But for investor, it might be a blessing sebab time tu lah kita boleh membeli. contohnya lah. Okay, and then liquidity risk, potential loss arising from the bank inability either to meet its obligation or to fund increase in asset as they fall due without incurring unacceptable costs or losses. Jadi, bank is unable to liquidate their commodity, their any asset that they have. Okay, and then we have operational risk, potential loss resulting from inadequate or failed internal process, people or system or external event. So the process that they have stated, they cannot comply with it, so it will have a operational risk in it. Okay, next one. Tolonglah berjalan. Tak nak berjalan pula. Okay, the next one is unique risk, or we can say this is all the specific risk in ICM. For example, we have a Shariah non-compliant risk also will be happen in Islamic banking as well. Risk arise from the failure to comply with Shariah rules and principle. So this is a very wide scope of risk to be discussed. Okay, maybe we might touch this in the Shariah governance part. Okay. So the impact will be later I will explain as well. Rate of return risk, potential impact on the return caused by unexpected change in the rate of return. So rate of return might be fluctuate, so that will be the risk might happen. Displaced commercial risk, so this risk bank may confront commercial pressure to pay return that exceed the rate that has been earned on its asset finance by investment account holder. The bank forgoes part or its entire share of profit in order to retain its fund provider, dissuade them from withdrawing their fund. So displaced commercial risk actually associate with the Islamic bank. Okay, any Islamic bank yang mana when the conventional bank will offer the depositor with higher rate of investment. For example, when we deposit a money in an investment bank, we will receive a dividend or receive a profit from it. Okay, masuk ke dalam bank, masuk ke dalam akaun pelaburan contohnya. So let's say the conventional will beat the Islamic bank. Okay, some of the depositor which is not tak kisah lah, dia tak kisah sama ada conventional ataupun Islam. Okay, some of this depositor will withdraw their money to go to the conventional. So Islamic bank would not this to be happen, would not allow this to be happen. So what they do, they will disburse some of their profit, okay, to give to the withdrawal or to give to the depositors in order to retain them from withdraw the money to go to the conventional, for example. Okay, jadi mereka akan keluarkan profit mereka akan top up ke dalam profit yang mereka deposit kepada depositor tu tadi untuk mengelakkan depositor sedia ada di bank Islam ini akan withdraw dan keluar terus daripada bank, sebab itu akan menyebabkan kerugian kepada bank Islam tu sendiri. So dia ambil langkah untuk bagi sikitlah profit ni 1%, 2%, 3% kepada dia depositor in order to retain them to fix ataupun untuk kekal berada di situ. And then we have equity investment risk, risk from entering into partnership or purpose undertaking, participate in particular financing, general business activity described in the contract, which to provide finance, share and business risk. Okay, relevant to the concept of mudharabah, musyarakah, where is related to the partnership. Okay, partnership when we talk on equity is a partnership between two party, third party dan sebagainya. Okay, Shariah compliance is paramount, original basis for having financial system that meet religious requirement of Muslim, factor that distinguish Islamic finance from conventional finance to ensure acceptance, validity, and enforceability of contract from Shariah point of view, fulfill the objective of Islamic finance, for example, to achieve justice and fairness in the distribution of resource. So this is the impact of Shariah non-compliance, just a bit of the whole idea of Shariah non-compliance. So the impact would be non-financial impact against the command of Allah, impediment of Allah blessing, barakah, jeopardize the bank reputation as Islamic bank, However, the financial impact will be invalid of the contract, or the akad is void. When the akad is void, the income cannot be recognized as the income of Shariah compliance. So when the income cannot be recognized, they are lacking in income, and the income that come is non-halal income. So income cannot be recognized as as a compliance Shariah compliance income. Jadi income tu mesti will be distribute to the charitable bodies, and also will be affect the capital adequacy ratio impact. So of course, for example, kita kata 1 juta, 2 juta, 5 juta, 6 juta. Of course, when the income cannot be recognized for Shariah compliance, of course it will be impact to the whole of ratio of finance from the whole institution punya dia akan impact kepada the whole process ataupun the whole finance punya kesan itu akan memberi kesan kerugian kepada institusi. Okay, so I think that's all for now. Okay, for this session we have explained to you the concept and risk return concept. Okay, and then we explain to you the risk management, risk profile in the ICM, and a little bit on the Shariah non-compliant risk. So I think that's all for now. So if you have any question, please put your question in Telegram group. Okay, so I will respond there. So kalau tak ada apa-apa, just give one conclusion on what you have learned from this session. Okay, give one conclusion for this session. Okay, thank you so much for your attention. Okay, we meet again in the next session. Okay, Assalamualaikum warahmatullahi wabarakatuh.